Hello, Warriors. How are you? Thank you, George. Hi, Brock, Didier, Jeff, Money. How are you, Hugo? All my Trading Warrior brothers and sisters. Hello, Kevin. How are you? Okay, so S&P's had some divergence going into the close, and we got a pop. I really don't know if I could recommend doing anything here. One point I want to make, and it was up here. It was this day. Okay, the 30. I was saying for a while it's hard for me to pick a top like this, but once we broke through 34 and a quarter and VIX closed over 30, it became a different story. So after this day right here, Monday, talked about selling 50% retracement where old support became new resistance and had this kind of day. I was mainly short the crude, which went down pretty much with the risk off situation we had. Okay, I'm going to give a tip of the hat to Gregor Horvat on that call. I always give credit to people who pointed my eye in that direction. Okay, Jess is probing the long side. I do want to make one point. The crude was great, but my best trade was this. And Blake helped the community out with this fixed call. So I was saying, you buy the 30 calls, and it was in September. So depending upon when you did it, price wise, time wise, you went through some time decay. But as of this morning's open, you have $10 intrinsic value on these calls now. So I don't know what you were paying, $2, buck and a half, 2.5, but you have 10 intrinsic plus any time value left. And I don't usually recommend options, but the reason I did it with VIX is, the formation, number one, the formation. Number two, easy to get taken out of futures positions. If your timing's not good, if you use too much leverage, you're not good at stop placements. So really, this was a home run ball. And I don't think it's over. I think we could pull back, but I think we're heading towards mid 50s. Did anyone buy these VIX calls, say about a month ago? And Blake said buy time. And Blake used to own a broker dealer, so he knows about options expiring. Oh, okay, great, TJ. Congratulations. I think you have enough money to join Forex Analytics now. Am I correct? All right, so I'm going to check with membership today to see if you subscribed. All right. Okay, Jess. All right. So what else? Dollar pulled back to this, you can't ignore this downtrend line. And then last night it pulled back to it right here. And here we are making new highs. Yesterday didn't think the dollar had much gusto compared to the slaughtering of the S&Ps, but you can't fight it yet. And we're probably, near the level where you're really going to see some squeezing going on above 93.80, 94. So that looks pretty good. US dollar yen trying to carve out something, almost looks like a 3 drive right here. See this? On the 4-hour, it looks pretty good. 2-hour looks pretty good. It didn't take out this low yet, did it? The 104 level. It actually held it. I think it would have been more bearish if it had taken this out, but I'd be careful about being short the yen now, especially if you start trading back over this breakdown area, 440 again. That looks like a good candle. I think I'm going to go with it. And let's see, I've done nothing in euro pound. I still think there's going to be a nice long side trade there. And oh, this was another feature yesterday. With all that risk off, you would have thought that bonds would have gotten a bid. I mean, look what TLT did. Still had a red candle with that kind of sell off in the market. So, I don't think it's over. Actually, I think we're going to 2,900 in the S&Ps by Thanksgiving. Thanksgiving is for Bears Feast on Thanksgiving. So that's a little less than a month away. And I think that the S&Ps can head all the way down to 2,900. I have some speed line confluence here, and that would be about a 15% correction. So those are my thoughts. Good morning, Monica. Any questions? Any? You guys want to see what I look like during the pandemic? Like a monster? Well, I'll wait for Friday because then it's almost Halloween. Okay, so
thank God. Thank God.
You ever see the Unknown Comic? All right,
it's hard enough keeping our people here so early in the morning, and then you show your face, and then half the people leave. I mean, come on.
Well, yeah, I know. Well, anyway,
you have a great face for radio.
That's such a cliche. I know. I have a good voice for TV and a good face for radio. So, what do you think of yesterday, Blake? Pretty bloodbath.
Of what? The
bloodbath.
Market?
Yeah. S&P's down 90. I haven't seen a day like that in a while.
Yeah, I mean, we were down a pretty good clip. I'm not surprised. I've been more thinking that the market's going to pull back ahead of the elections. It was a little bit more aggressive than I thought, but it wasn't surprising to me. Not at all. Yeah. Now, a lot of people keep asking me, like, how far are we going to go? I still think that 3,200 is going to hold us. I know we're only 50 points away, but I don't think 3,200 is going to give way ahead of the elections. Now,
okay.
But that would, to me, mean that it is increasingly looking like, as we get towards election day, that
contested,
that Trump's going to pull it out of his of the hat, where he can looks like he's really getting close, and the elections are looking very close to a contestable type of situation. Excuse me, I'm sorry, let me rephrase that. I was thinking about something else, meaning that if it looks like that Biden is continuing to hold the lead, then you might see stocks bounce a little bit. I at this point in time, we're putting together this blog that's going to outline all the different scenarios. Now, not all of them, obviously, but we're going to outline some different scenarios and how we're going to approach the market, and it'll be out by this weekend. So just stand by for that. It'll be good. Okay. I think you guys will enjoy it, especially those of you that don't live in the United States. If you don't live in the United States, it's there's so much information out there, and so if we can deliver you kind of a broad-based picture of what we're looking for and maybe the possible outcomes, I think you're going to benefit from it. So it'll be out and Gary asked if Kanye wins. That is not factored into our equations. However, we should probably be paying attention to it, huh, Dale?
Oh, Kanye, he's found God.
Guy, man, there's something.
Are you referring to Kim?
Didn't she have a
Kanye.
private? Didn't she have a party on a private island this last
That's
week?
the stuff that you would know about. I don't know. I'm a mere mortal.
Kim who? Kardashian?
Kardashian.
Oh, don't get me started on
guess
her.
They had a private
Why,
party.
you like her, Steve?
I
Huh?
no, I don't.
What's your
actually.
language, Steve? What's
You
your
know,
language?
I don't understand what's the whole fuss around her. I don't like her.
Okay.
You know, I'm just going to talk from I mean, you know, I'm just going to say this. I don't understand either, Steve, but I have to, my defense to that is going to be, I've always, I would say majority of the time, like 90% of the time, I've always dated and married a blonde woman. So that to me is, I'm just, I guess I'm more tilted that way. So
No, I'm saying
but I
as a
still-
person that has no preferences to, like blonde, brunette, or
Let's.
whatever.
Shall we
Yeah.
move on from Kardashian?
Yeah.
Okay, yeah, good idea.
Thank you.
Good idea. Because we could really, especially the market. Let's stop for a moment and thank God, thank you, Stelios, for being here and pulling us back from the cliff, because we're going to start talking about butts and all sorts of things. So,
Friend here is saying,
I was going to go there next. It's so big.
Yeah, let's.
Hers is so big, Blake.
one of our friends here is saying keeping up with the traders. That's a good one.
That's actually good. That's good. All right, so let's talk about what's happening in the market right now.
Let's do the bias, not on hair color.
Yeah, we're gonna yes, not the blonde bias. Let's talk about the bias. The one thing that you see that's holding here is the dollar yen's holding the 104 level. Really, really strong support. But I have to point out that the yen pairs are breaking lower. So overnight, it's rare that this happens where I put in a trade and it works out exactly the way that I had thought overnight. A lot of times, I'll get into a trade and things are working, and it's working the way, I expect it to, but I don't get limited out much in positions overnight. Last night, I was at my son's soccer practice and, I'm walking around the park and I knew the 74 yen level was a big level for the Aussie yen. And so I figured, well, we have very limited risk here. So I shorted the Aussie yen at 80. At 79.80, and I put in a limit order at 73.25 because I knew this is the 127% extension right here. And so I shorted it here with a limit here, and my stops were just above 74. And I figured, well, I'm not risking a whole lot. I got a 1 to 2 risk reward ratio, and I'm not looking for a lot, but I know that we're in a bear flag pattern. So, and by the way, if you use Forex analytics, you knew that this is all the bear flag pattern points to 200-day moving average, as well as we are well below the 74 level. While below the 74 level, near term, we should see 73.23. That was last night's analysis. And I just, I took the trade because we were sitting up here at 80 last night. And, I got up this morning and I was limited out. So it was one of those rare occurrences where I get limited out. A lot of times I'll take a trade overnight because I'm expecting a currency to go where I think it's going to go, because in Asia, and Asia tends to push our markets in opposite directions of where they were going in North American trades. So I like to take advantage of that if I can, and a lot of times it happens, as Europe is, or excuse me, as a lot of New York East Coast traders are heading to bed, we see Asian markets peak or bottom around that time. and I'm usually up at least slight, about ready to go to bed, just because I'm on the West Coast, not on the on the East Coast. So anyway, I try to take advantage of some of those situations. And last night I happened to do that because I knew we were in such a strong, bear flag pattern. So anyway, I just thought I'd share that with you because, when you're looking at this dollar yen and you're like, man, we're really holding 104, but you have to look at all the other yen pairs. Look at the euro yen breaking down, pound yen broken down out of a triangle. You guys are all, if you're Forex Analytics subscribers, I'm not, telling you anything that you don't know. New Zealand yen, we're approaching the 200-day moving average. Canadian yen broke new trend lows yesterday. And, we're heading down towards these, this 127% extension, this, this horizontal. But look at all the downside risk in the dollar or in the yen pairs. And, with the dollar yen below 104.50 and holding below 104.50, the risk is building that we, trade down towards 102, especially if we can clear 104. So anyway, just a little heads up. And so while I'm doing this, I might as well go ahead and write this down. 104 is key support for bulls. They're trying like hell to support it. And I'm going to tell you, there is dollar demand going into the end of month, and that's one of the things. Bank of America is one of the brokers that we're plugged into through Bloomberg. We are in touch with not just Bank of America, Citi and Barclays, and they report back, what they're seeing and blah 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 blah. So I get to hear a lot of chatter from different banks all day long. And yesterday, Bank of America said, there's a lot of end of month dollar demand coming through the market right now, and they had picked up like a half a yard of dollar yen. This was early yesterday morning. They're like, we already picked up a half a yard, and it's early, here in North America. So I don't know if we're gonna, by the fix, by the New York or the London fix. That's usually when those orders dry up. So we may hold 104 for now, but if equities stay heavy, the dollar yen could slice through that support a little bit later today. It's possible. Anyway, just little heads up regarding that. All right, so here's the euro. The euro's approaching, this key level support here. This is the support zone that we've talked a lot about. This has been drawn on our charts for, quite some time. And this lower level comes in right around the 106 or 116.90. So we're sitting here at 106.9 or 116.90. That's going to be pretty strong support. We break through that, and my opinion is if we break through that, we're probably going to retest these lows down here. But there's obviously support ahead of that. But you can see this is all pretty good support through here. So right through there. I mean, actually I should probably write down 116.85. It's better. Oops. Hello, there we go. Resistance for the euro. Now any move back up here to 117.60, as long as we're below that, there's no reason to be bullish intraday, I don't think. Okay. Wow, the euro is just getting absolutely creamed right now. Just we're going to test this support before I leave here. I'm thinking cable. As you can see, look at this zone that we have here. This support zone, resistance zone. I mean, it's been really critical. We've had that drawn out here for weeks too, but now we are approaching these lows, and that comes in around 129.15. A break below 129.15, and let's figure out where we can go. Let's take this. This is the 50% retracement. So below that is 128.60 would be our next stop. $1.2860. Okay. Okay, so resistance is now the overnight highs, which is going to be 130 25. Did we really trade up to 130.25 overnight? We did. Holy cow. Look at that. Straight down. All right. Aussie. Aussie is threatening a big breakdown, guys. I mean, I don't know if I can really illustrate how important this support is. Yes, I can illustrate how important that support is. Let's go take a look. This is so important. I mean, this is 70-30. Resistance, support. You know, we break through 70 cents, and I mean, you got to think about this. And I want you to think about this from a, you know, just a pure dollar perspective. You know, you take a currency like the euro. You know, if the Aussie breaks through 70 cents, it's so big, such a big support. If we break through that, that alone, a breakthrough 70 cents could send the euro 50 pips lower, you know, just as a courtesy move, right? So just think about that. Really important supports here. Resistance. I mean, I guess we have to write this down right now. You know, 70, 75. Well, while we're below that, there's no reason to be, you know, there's no reason to be bullish. But it, you know, I have to also argue the flip side of this is, if you want limited risk reward, you could buy the Aussie right now. I mean, look, how many times have we been down here and we've been supported at 70 cents? I mean, we've been down here 1, 2, 3, 4 times just over the last month, and you know, so can you get long here in the Aussie? Yeah, you could. Do I think it's the right trade? No, I don't. But that's, you know, I have a hard time, and I've explained this to you guys on many occasions. I'm very much a directional trader. So if I'm biased, like let's say I'm just an Aussie bear right now, I have a hard time trading on the long side. Some of you are really good at trading both directions. I'm not, and that's a very clear to me, very clear weakness of mine as a trader, and it's okay. I know it. You know, so I know
Know
it. I know
thyself. Know thyself.
Yeah, I know thyself as a trader, so it's
Yeah.
fine. You know, I know I'm not a good counter bias trader. I'm a good counter trend trader. Just my bias, if my bias is one direction, I have a hard time doing it. So the reason why I'm telling you this is because I do think that the Aussie is going to eventually break down. I think this is a bearish wedge, but I'm not the guy that's going to be trading it on the long side. You know, up here, when we were down here this last time here, was it a week and a half ago? I told the guys in our office, I'm like, look, if you guys think that stocks are going higher, you need to be buying the Aussie right now. It was at 70-40. And they're like, yeah, you know, that's not a bad. And some of the guys in my office actually traded on the long side. I didn't, but I'm like, you know, that's, I mean, that makes sense. If you guys think that stocks are going up today, if you do, you think stocks are going to bounce here, buy the Aussie. Just put your stops below 70 cents. But I will tell you this: if it goes below 70 cents, I don't think you want to be long. So you have to have a hard, fast stop, and don't mess with it. Don't do the, oh, I know it broke below 70 cents, but I think it's going to bounce now, so I'm going to move my stop lower to 69.50. And then I guess 69.50, you're like, nah, well, now it's really oversold. So I think it's going to bounce back to 70 cents. So I think I'm going to just put my stops at 69 cents. Next thing you know, the thing's trading at 67.50. You're down 250 pips and you're like, how in the hell did I get in that situation? So don't do that. Just know that below 70 cents, things get downright ugly. Is that going to happen today? I don't know, but I'm not willing to take the shot. Anyway, okay, I'm going to get off that conversation because I could talk about that for a long time, about trading psychology and, that type of thing. But, the do's and don'ts. Okay, look at the Kiwi. The Kiwi, we're still forging this head and shoulder pattern. Right now, we're attacking this is, if you can see this fib here, okay. The 618 retracement is right here. It's right here at 66.18. If we drop below that, that's the 618. The 786 comes in at 65.88. So I'm going to say 65.90 would be your next level support. I'm writing it down just because we're so close to the first support level. That's the only reason why I'm writing that down. And while we're below 66.60, I don't think you should be bullish intraday. Whoops. Because I think we got this big head and shoulder pattern that we're building. Right. That one. That was our chart of the day from Monday. I think it was Monday, perhaps, or maybe Tuesday. I can't remember. Dollar Canadian. Let's take a look at the Canadian. Canadian's ripping. Crude oil is breaking down. So just talking to Chi's got a brand new business in New Jersey, and he's so he's not in the chat room as much as he used to be, but we do miss him because he points things out like this. He's like, "Hey Blake, do you see a harmonic pattern here?" And I'm like, "Yeah, I do actually." I go, "Are you seeing this?" And he goes, "Yeah, I'm seeing that too." So, this is the dollar Canadian and kind of a good view of what could happen in the next couple of weeks, especially if you think about, okay, we're going to probably have a contested election. That means there's going to be a risk aversion. That means the dollar is probably going to strengthen. That means the dollar Canadian is probably going to, move higher over the next 2 weeks. Yeah, that's a pretty realistic scenario. We could probably trade up towards 136. We have a lot of work to do to get there, but as you can see, the dollar Canadian is ripping, and we're probably at the 88% retracement right now, which might hold us intraday. That comes in at 133.82. So 133.82. Next resistance would be the trend high there, which comes in at 134.20. All right. And like I told you yesterday, a lot of these are on the verge of flipping bullish or bearish. Like, the euro's on the verge of flipping bearish, but I can't change them just yet because we're pushing range levels now. So any dip in the dollar Canadian back to 132.60 should find support now. And remember, it's down because crude's broken below 36 bucks. So dollar Mexican peso. Well, we just ripped past the 21.50 and to 21.50 or 21.25 and now to 21.50. You guys can answer this question. So you can answer this question if you want.
Blake, before the question, we have GDP and jobless claims.
You know what? Screw that. I'm not listening.
Yeah.
I'm not listening to
Actually,
data.
jobless claims probably more important than GDP.
It probably is, but all
Not to our president.
Let's take a look at the data. Thank you.
Plus
Stelios, for getting my
35%.
attention. Even
We're
though
all
I'm
the way back.
very irritated for Stelios trying to get my attention here.
Hold the thought. Hold it. Okay.
I'm going to. All right, here we go.
Oh, looking for 31. 35. Come on, 35. Come on, 35.
How much time do I got here?
Negative 35.
5 seconds.
That would be a
Okay, here we go.
wash. Plus.
Okay. It's late.
Hello.
It's not out. Oh,
There.
it's coming out now.
Jobless
Initial claims
just
are
came
out.
Yeah, close enough. Continuing claims are also very close, so that's not going to move the needle. Let's see.
Where am I at? Oh, here we go. Here's the data via Bloomberg. Hello, where's the GDP data? My goodness.
They're cooking it.
I'd like to finish what I was doing. I'm waiting on you guys any day. Well,
Does TBA stand for to be adjusted?
to be announced. Oh yeah, to be adjusted.
Nice
That's
one.
funny. That's funny. All right, 33.1%. Market was looking at 32. So it's good, I guess. You can see it's running a little late on data flash. There must have been a hang up there with the data.
Yeah.
So the market's not really moving at all. So, all right, well, hey, guess what, guys? The market's not moving on data. Isn't that weird? So
Yeah,
strange.
absolutely.
We didn't know that was going to happen. All right. So I was going to ask you guys earlier about the dollar Mexican peso. For how many days have I been writing 2150 as being resistance if we break through 2125? I don't know.
2 weeks.
At least, right? So what's the overnight high? 2148.50. Obviously 2150
number.
is still a big resistance level, right? Still, we've been looking at that for weeks, and you can see it. It's holding the peso. So now any dip down to 2110 should offer support. You guys know I actually had bids overnight at 21 and didn't get filled. And 2110 is also support. So just, same old, same old. All right, dollar Swiss. So dollar Swiss 91.60, right? And then support is 90.90. And if you guys are new here, you guys know we do this every morning with all these pairs. Okay. Let's go to the dollar index. So the dollar index is obviously stronger this morning as we push up towards this 94 level. This is going to be big resistance zone as we come into it. So 93.90 to 94. You guys know I've been writing down 94 because that's the upper end of the resistance zone. Support now is at 93.35. And this is, you could give it all the way down to 93.15. This is all going to be support. So if you see the dollar dip for some reason today, which it could, especially if the dollar yen has such a, pretty big influence on the dollar index as a whole. If the dollar yen broke through 104, it could actually drag down the dollar index a little bit. So, I mean, if we did something like that, you have to use that as an opportunity to get, to take, excuse me. Ooh, I just hit my microphone. To take it as a bounce. So anyway, support for now is going to be 93.35. US dollar, Norwegian krona. As you guys know, that my chart of the day yesterday was crude. Yeah, and said, hey, if crude oil breaks down below 36, it's going to push dollar, the Norway lower, and it did, as you would expect, since Norway's, they're such a producer and exporter of crude. They the risk is because we're squeezing the hell out of Krone longs right now. We could extend those gains up towards this trend high, which is 161% extension at 958. I would expect any dip down to 940 to be supported, because anybody who caught short doesn't want to be short anymore, and they're going to be trying to buy it on any dip. So I'm just telling you that from, I know a lot of traders that are caught short this one as a fact, because I've been talking to one of the guys that I work with, and he's been talking to his guys at the bank that he's traded with at Nomura and Standard Charter, and he's just like, dude, a lot of people have been hanging out long Norway and they're caught short now. And we've been talking about that for weeks, and I think I've even mentioned it here that he's an ex-Lehman guy and been at a lot of different banks, and he's just like, yeah, a lot of people have been just hanging out long Norway, short the US dollar, Norwegian krona in this risk on environment. Well, you get risk off and they all start getting squeezed. You can see that 200-day moving average is coming up towards that 161% extension. So that would obviously cap. If you guys want to trade Norway on the long side, I think if you can get a move to 960, yeah, you just sell it right there. Limited risk reward, right? Limited risk, good reward. Again, I'm biased, so I have a hard time doing that trade in particular, but I know Stelios loves Norway, so that'd be a good trade, right?
Me too.
I'm looking to reshort Euro Norway and Dollar Norway.
Why don't you do it right at the 200-day moving average like Blake says? Just why don't you do what Blake says?
Yeah,
A lot of
Blake
blondes,
says.
a
Blake
lot of
says.
blondes in Norway, Blake.
I like
Just in case you didn't know, you were planning a vacation.
All right, okay.
I like 980 and 1010.
Good.
Steve likes
well, hey, you
Sweden.
know what? Wait, let me finish up, and then I'm gonna let you show your charts. As long as you don't show your Kim Kardashian behind, then we'll all be fine. Let's go, because I can.
How do you hide
guarantee
it?
I can guarantee you, your ass does not look like hers. So let's.
Thank God, no. Yeah, it doesn't.
Thank God. Yeah, you should thank God.
I would need a pillow to sit on.
Okay, oh man, that's hard. That hurts.
I
Okay,
I need one.
here's the S&Ps. As I was explaining to you guys earlier, I'd really originally thought that the S&Ps were just going to grind lower. This week we've actually imploded lower, and there's some reasons, but I don't expect us to really break down below 3,200. Not ahead of the election. I'm not, and you guys are going to have to figure it out from here, like whether you want to be long or not. I think having no exposure going into the election is the right decision. But if you're just trying to trade around it, I think the, best risk reward is going to be, if you can get long, in the 3220s, because then your risk is manageable from there. You can see we're hitting new lows. Relative strength is divergent intraday. So, I don't think the market's going to go too far today unless some groundbreaking news hits the market, which I can't imagine what that would be, other than polls are shifting quite a bit, which would mean, Trump really starts to close the gap in the polls, which I think is a very realistic expectation. If that happens, you might see a heightened risk aversion, which could push us a little lower. 3240, 30. Well, I'm going to write down this 3210, and then 3245 is support. And then if you guys are looking for shorts, I think that maybe a move back up here could happen, which would be 3340, which is that previous 618 right there, right? Let me thicken up that line a little bit. So yeah, 3340 could offer some pretty good resistance on rallies. And let's go to gold really fast. And I'm going to reiterate really quick. If you guys don't know this, if you didn't hear this earlier, we're putting together a blog for this weekend on the presidential election outcomes, and like what are some different scenarios think about it this way: Trump wins, Democratic Congress, that type of situation. And also we're going to be talking about, yeah, you bet, Stel. And we're also going to be talking about, what could happen with gold and the S&P and the dollar index predominantly. And we're going to give you Elliott wave views, harmonic views, technical analysis views. So you're going to see all that analysis in a blog. And if you're not in the United States, I think it's going to be a good, because I predominantly put it together. I think it's going to be a good, like, here are some different scenarios, and here's, a trading plan around that. I think if you are not in the US, it'll be a good overview, easy overview for you, not overly complicated. So I just want to let you know that is coming. We're working on that, and it'll be done by this weekend. Okay. Because there's a lot of crap out there. I mean, when I say crap, I mean, there's just a lot of information out there, and you could really get in the weeds going through all the information. So, we're just trying to make it a simple, hey, if this, and this happens, you might have this expectation, that type of thing. All right. 78% retracement in gold is holding. I am focused right now on this 1850, and while we're below 1890. So 1890 and then 1850 is important support. Okay, and we are keeping everything in range because it's pre-election. You can't get too biased ahead of the election. So there's your bias chart. I'm going to leave it up for you for just a second. I want to mention, for those of you that are Forex Analytics subscribers, thank you so much for your support. For those of you that are not, you should try it out. It's only $1 for 10 days. And if you really want to try to get Forex Analytics for free for a period of time, you should check out Pepperstone Securities. All you have to do is go to this Forex sponsored tab on our website. And if you're outside of the US or Canada, you can actually open an account with Pepperstone, or, connect through Pepperstone and get Forex Analytics for free for a period of time. So check it out. You have to use this link right here where it says open account, because we actually manually have to enable you. It's not like an automated type of system. So, once you get your account open, you have to do it through here. We physically actually have to turn you on. So anyway, we look forward to having you as a possible customer Forex Analytics. So with that being said, I'm going to go ahead and pass it over to my colleagues, Steve and Stelios and Dale, so they can talk about Kim Kardashian's butt without me.
We physically have to turn you on. That sounds a little bit weird, but yeah.
Yeah.
That's
You said it, man.
It's Kardashian.
Your heads
I'm gonna leave that job to Dale.
Yes, you guys get to keep your heads in the gutter. I'll tell you. All right, I'm gonna pass it over to you guys.
Thank you, Blake. Thank you.
All right, good hunting, Blake.
Thanks,
Thank
guys.
you,
Have
mate.
a great one.
Thank you.
Hey, guys.
So, hey, how you guys doing? By the way, we have the ECB in about a minute and a half. No change expected, but the presser afterwards is probably going to be is going to be the important part. FACE is going to be over then. Unfortunately, this week the time difference means that we're not going to catch it, but it's okay. For those of you who are Forex Analytics members, we're going to be in the chat room. We're going to be discussing everything. So more risk off. And actually, it's interesting. During Asia times, stocks were up, but Asia trading, I mean, but they're coming back down now. And I'm very happy to see metals coming lower as well.
Indeed, that was a nice development.
Yes, silver is coming close to my buy zone. It's going to be somewhere in the 21s. I don't know exactly yet. Haven't decided. It's going to depend on price action, how it gets there. But I'm starting to stagger some buy orders, both in silver and, believe it or not, in some equities as well, but very slowly. So this is really the big thing going to the elections, how risk assets are going to evolve and how they're going to move. And, for people who may be unsure why this is happening, well, I think Blake talked about it briefly. It's the whole question of what kind of result are we going to have? Are we going to have a contested election? Is it going to take 3 weeks to find out who's going to be the president? All this
Yes.
kind of uncertainty is not good for stocks, not in the short term. Obviously, we have in the back of our minds the fact that every major central bank is just pumping liquidity like there's no tomorrow. Actually, like there's no tomorrow and the day after tomorrow and the day after that. But so
ECB
that,
as expected, by the way, just confirmed.
yeah, that would have been a shocker if anything.
Yeah,
happened.
it would have been a shocker indeed.
So that's happening in the background, and that's going to continue to happen, especially if, or shall I say, as we're now getting a second wave, COVID, and more lockdowns coming. Is it going to be whole country lockdowns? Is it going to be localized? I don't know, but it's happening. Actually, Steve, can you take over? Somebody was ringing my bell. I'll be back in 2 minutes. Okay, I'll be back.
Okay, so
Absolutely.
Steve, did France on their lockdown, is it a stay in place lockdown for a month?
No, not yet. They're just closing like restaurants and bars,
Okay.
and putting some
Yeah.
restrictions having to do with the hours you can be going out, and you'll
Yeah.
need like a permit, like we had in the initial lockdown here. So it's not like a full lockdown, but it's like just a step
Yeah,
before
like
that.
what we did here in the US.
Yeah, we did it as well very early in
Yeah.
the first phase. That's why we
But you
stopped
guys
that.
had a more severe lockdown than us, I think, even. I mean, people
Oh,
were
yeah,
going
and-
everywhere here.
And
Yeah.
for a period of time, it worked great. I mean, in
Yeah.
essence, afterwards we didn't have any issues, but now the situation is exploding almost in every single country. One of the exceptions being Sweden. They were seriously
Right.
accused for their handling initially.
Yeah.
They had, a lot of dead people initially, but now life in Sweden has gone back to normal more or less. So
Wow.
it's
So, and they're, and that is the way the current administration is leaning towards, just protecting the older people, the vulnerable, and let the healthier, younger population just go out there and get it. And the sooner the better, so that we have herd immunity. So it almost sounds like Sweden
I've
has
had a lot of
accomplished herd immunity.
conversation with doctor friends. Some of them
Yeah,
are
what
like
they
really
say.
highly esteemed.
Yeah.
They're not optimistic. I mean, one of them was telling me today actually that there is a possibility that this situation can extend for another 2 to 3 years,
Right.
not in the same extent.
Yeah.
But in any case, what everybody agrees on is that hoping or believing that there can be
Hey,
a
I'm back.
solution.
Sorry about that. It's
within- welcome.
Murphy's law. I've
Yeah,
been
yeah.
expecting something all day, and it happens in the 5 minutes that we're talking. Anyway, I'm here.
But they all agree to the fact that there is absolutely zero chances that there can be like some kind of a solution that will solve the problem within a few months, like 2-3 months. No way.
What they say about herd immunity of just letting it go through the population.
They think that that's not going to fly in where we live.
Okay.
As an approach, so they don't even consider it, because they don't think it can actually, it has enough public support to even be tested.
Yeah.
So
Okay.
that's that.
Okay.
You're talking
did
about
you-
you're talking about Greece, right?
Yeah, but in general, most
you have-
European countries also.
You have an interesting demographic here, as in other southern European countries, that you have a lot of people who are living with their parents. The same
Oh
building.
yeah. Yeah.
So that's going to be a big deterrent.
Yeah,
Anyway,
a lot of people are also living or being subsidized by parents' pensions. Add that
Yeah.
to the mix.
True.
Yeah. Hey, did GDP ever come out?
GDP. Yeah.
Well, what was
It
it?
did.
33.1. It was
33 point
beat.
Oh,
something.
in line. Okay.
It was beat. It was a beat. Yeah.
It
Oh,
was a
beat.
slight bit. Yeah.
Okay.
Slight. I mean,
The beat
yeah.
goes on. Yeah, the beat goes on.
So what else, Estelle, before we can have a couple of...
No, that was all I was going to talk about, actually. I mean, I was going to mention oil as well. I mean, it's just moving in line with risk as well. So I think we're going to be, it's going to be very choppy going into the elections. I think we have more downside in risk.
Oil playing out one of the two scenarios we were talking about.
Yes.
I think the first area of support, of serious support, is around 34. I don't really see any support for crude until we get to 34, and it can really get lower than that. I mean, my target was and remains, my ideal target would be $29. I would really want to get my hands on some crude down there, if of course
I agree 100%.
yeah, if of course the structure and the way it's behaving is appropriate. I'm hoping. I mean, I'm already very happy that I'm seeing silver and gold on their way to some levels that I consider good opportunities to buy. I'm seeing crude doing the same thing. So a little bit more risk off, and I think we can get ourselves some very decent prices.
The only problem with getting long oil is that at the time, if that happens, it's going to be very costly to buy something without negative carry and contango. That's the problem.
Yes, that is true. That is why probably once again I might consider doing it via a proxy, meaning choosing some oil company and
yeah, or a currency,
getting exposure there, or a currency, which in any case USD NOK, since we were talking about it before with Blake, I do think that most likely than not, we had discussed that possibility a long time ago that USD NOK would probably post another high. I said that once we started seeing the way it pulled back, I said, listen, I might be short, but I do think this wants to produce one more high. And I do think that the appropriate levels to find a high actually would be either this support resistance area at 980 or this one at 1010. Between the two of them, we have the 38.2 at 997. I think anywhere between 980 and 10.1. These are good entry areas, and I do believe that USD NOK has more to go to the downside. I very strongly believe that. So, I'm still in the money. I mean, quite a lot in the money, and I'll be more than happy to add more to my position once we move higher. For the exact same reason, I have no problem buying crude. I absolutely have no problem holding to short USD NOK. I explained since the very, very beginning that this is a long-term position for me. So I just want to keep building on it. I'm here in the trade to stay as long as it's needed. I'm absolutely okay with it. Now, since we went through all that, needless to say, and since we were talking about crude, the USD Russian ruble is also benefiting from this. We clearly saw that the correction lower was in a very orderly manner, so it makes sense to have one more push to the upside. Keep in mind that this 8250 area is a very key area of resistance. I'm looking to see what's going to happen from there. I think there is a very good chance that we're going to have a good reaction. And since we're speaking about currencies that are correlated somewhat with crude, the Canadian is one of them, but I want to pinpoint mostly here. Blake covers on a daily basis the USD CAD here, so I don't want to go over that, but it's a good idea pinpointing that the CAD yen, if you look at this, is currently testing a very nice confluence of supports at 78. So I do think that a break below 78 is going to be a very, very nice technical breakdown. So I do consider that somewhat of an opportunity. It's interesting also to consider that the USD yen is striving to hold the confluence of trend line supports from these two triangles, right? One contained within the other. So as you understand, a potential breakdown here in the USD yen should take with it the vast majority of the yen pairs, and especially as long as we have this risk-off environment. I don't believe, by the way, my opinion hasn't changed. I don't believe it's going to last very long. I believe it's going to be a corrective type of move, because one way or another, we're going to get something happening out of the elections, and then we're going to get tons and tons of stimulus thrown at the economy once again. And
But
if-
that
if there-
VIX close over 30 was a pretty good signal,
yeah,
wasn't
yeah,
it?
we've already discussed that. I mean, the VIX,
No,
VIX
you were
was
arguing
clearly,
with me that day. I said VIX, VIX, VIX.
yeah. And if you remember, the first thing I told you is that, we had talked many times about these support and resistance areas, right? We had said 25, 30, this range at some point has to break, and when it breaks, it should extend. And in this case, that happens. And
Yeah.
I still think we can see 45.
Yeah.
Do I believe it's going to be some type of a long-term explosion or whatever? No, I don't think so. I think that once the market gets what it's waiting for and it gets lots and lots of stimulus, the market is going to quiet down once again. It's not the right reasons why a market should be quite calm and unvolatile. It has nothing to do with the real economy or any type of macro thesis. But unfortunately, these are the markets that we have. In any case, if USD yen actually breaks down, I think that CAD yen can really accelerate to the downside, especially for as many days as this lasts. Crude should continue tracking more or less risk. And the CAD yen, in case we break through this 104 area in USD yen, should be an excellent short under current circumstances. So that's what I had in my radar to talk about earlier. Now let me go through some of your questions, which I'm pretty sure there are a lot. Steve, take a look at gas. Absolutely. So here's natural gas. There it is. Still looks good, right? I mean, it still looks good to me. I think that as long as we are above like 290, next upside resistance 370 something, still looks good to me, both in the short term, medium term, and long term. That's what I think about natural gas. Steve, what about the USD Turkish lira? What about it? The USD Turkish lira is a one-way train. It's as simple as that. And why is it a one-way train? Simply because Turkey has huge problems, the vast majority of which come from Erdogan, having in essence contracted the Napoleonian syndrome. And as long as he's in charge and his policies are mostly focused in leaving a legacy greater than Ataturk, I think that Turkey won't be able to capitalize on some huge advantages it has, with the main one being amazing demographics. So I think that at some point in the future, long Turkish lira is going to be an amazing trade and an amazing carry trade. But I don't.
You get more carry with the lira than you do with the ruble?
Haven't traded any of them recently, especially Turkish lira.
That'd be interesting to know.
I think you should. You would listen. Once Erdogan is not in charge anymore, no matter what it is, you're going to see rates explode higher. So yes, definitely the carry trade in being long the Turkish lira then is going to be unbelievable. And I
these
do
could be big trades in 2021.
I'm not sure.
Lira?
I'm not sure they're going to manage to get rid of Erdogan that fast, but at some point, it's going to be an amazing
I'll take care of them, man.
Until that happens,
let's get long. I'll take care of it.
Yeah, until
I'm
that
from
happens.
Chicago, man. I'll fly to Istanbul with my violin case, like my ancestors did in Chicago. That's where they carried their Tommy guns.
Okay, Mr. Hitman.
They're cockroach. I'll say you cockroach Erdogan.
I can say one thing: you're in a really good mood today.
Oh yeah, why not? Huh?
Yeah, no, I'm not saying.
I am at least 10% of the time. Anyway, we have Danny Naz with us today, the pup at the Pup on Wall Street.
Okay, perfect.
So, I'm wondering, how he came up with that handle, but
Yeah, that's a
it
good
says-
question, actually.
yeah, and it is first time here. So looking forward to meeting Danny, and it's time if you're through.
Absolutely.
Well,
Absolutely.
we got-
I mean, we can keep talking for like 40 minutes
Yeah.
easily, but
Okay,
interview has a priority, always has. Okay,
Yeah.
so more tomorrow for Forex Analytics members, of course, the day goes on.
what's today? Thursday?
Yes, it is
Yeah,
Thursday.
Okay, all day, huh? Okay,
All day long. Yes.
okay. So Danny, I've made you a panelist. I'm asking you to unmute.
Very good. How are you, sir?
Danny, great to meet you. Thanks so
Same as-
much.
Same here.
ahead.
My pleasure.
Yeah, thanks so much for taking time out of the markets right now, which are pretty wild. Have you used Zoom before?
Oh, every day.
Okay, well, you could go ahead and share your screen then.
Perfect. Give me 1 second. All right. Everything
Okay.
looks pretty good on my side.
Yeah, looks good. So why the handle